With extreme lows in the crypto market, are we in for a surge? Dips explained. Investment opportunities in the crypto market are unique in that you can even make up to 100% of your investment easily by simply putting your money in when the market is at its low. For example, during the past year, it happened 2 times when prices of Bitcoin went close to 30,000 and then recovered back to 60,000. And if you would have invested in it actively, you had an opportunity to get 200% on your investments easily. But what happens to new investors is that they get attracted to the news heads saying that Bitcoin has reached its highest level in history, and they get involved with crypto, when in fact, that's not actually the best way, but instead is an indicator that the prices of the leading coin can quickly fall back after touching to the highest levels. In fact, the best time to put your money into Bitcoin is when the market is at its lows. In this video, we will know about how to get more out of these macro and micro level dips in the crypto market. It is also the opportunity that most mature crypto traders never miss. But the timing of investment and in which coin you are investing matters. It's a golden time when any crypto is at lows. When it rises, you will get more value from it in the future. Another factor that matters the most is you being updated with what is going on in the crypto market. And one way of staying updated is by following our channel, as we always update our subscribers about the ongoing events in the crypto market. We also bring educational content which can lead you to make better decisions with the crypto. So be part of our community. And also don't forget to hit the bell icon so you get notified when we have a new video. So why does the Bitcoin price go up and down? The fundamental cause of Bitcoin's fall is widespread market anxiety, fueled by the Federal Reserve's economic tightening policies and the prospect of tighter regulation. The cryptocurrency market is full of ups and downs, so let's take a look at some of the reasons why Bitcoin has crashed. Number 1. The Federal Reserve is hawkish. Several pandemic-era initiatives that aim to bolster the economy are now on the verge of being phased out by the Federal Reserve. Because of increasing inflation, which is at its highest level in 40 years, this is occurring sooner than predicted. During the epidemic, the Fed sought to help the economy by lowering interest rates and purchasing bonds. The quantity of money accessible to the financial system is increased by purchasing bonds. It is now easing up on these restrictions. Number 2. Increased government oversight. Another major factor contributing to Bitcoin's decline is global regulatory changes. Russia's central bank has advocated cryptocurrency mining and trading. The potential of a ban has further contributed to market worries, given that Russia accounts for over 10% of Bitcoin mining and an estimated $5 billion in cryptocurrency trade. As the year proceeds, we may anticipate new crypto regulatory frameworks in the United States, Europe, and several other nations. But cryptocurrency isn't the only asset in decline. Other asset classes are also in decline. Since 2019, COVID has done so much damage in every field, as we all know. The Omicron variant epidemic and the uncertainty surrounding its severity and the effectiveness of vaccinations, which is yet unknown, has sent investors fleeing. It's also the holiday season, and as the year draws close, many investors are trying to lock in profits and make money off the table. Number 3. Supply and demand of Bitcoin. The most important factor influencing the pricing of most commodities is supply and demand. Bitcoin's market value is determined by the quantity of coins in circulation and the price people are willing to pay. The circulating supply of the cryptocurrency is limited to 21 million coins by design. As the circulating supply approaches this limit, greater prices are expected. When the limit is reached, it is impossible to anticipate what will happen to the price. Mining Bitcoin will no longer be profitable. Bitcoin's price will most likely vary in reaction to any moves taken by major financial entities as they vie for ownership in an environment of limited supply. So, is it safe to buy Bitcoin? Bitcoin may be purchased via government-approved cryptocurrency exchanges such as Coinbase. If you want to use Bitcoin to save money or increase your assets, keep in mind that its price is very unpredictable, and there's no guarantee that you'll earn any money. You're just as likely to lose everything you put in as you are to make money. Honestly, each person's circumstance is different. You should always get advice from a knowledgeable specialist before making any financial decisions, because it's all about the timing. You've probably got a feel for the Bitcoin business due to your meticulous study and may have decided on one or more projects in which to invest. The next step is to choose the best time to make your investment. The world of digital currencies evolves swiftly and is notoriously volatile. On the other hand, investing in a hot new currency before it bursts in popularity and value may drive other investors to do the same. In reality, monitoring the sector before making a move will increase your chances of success. Cryptocurrencies have their own set of pricing trends. Bitcoin is often the forerunner among digital currencies, which follow in its footsteps. Because news of an exchange breach, fraud, or price manipulation may send shockwaves across the cryptocurrency sector, it's critical to watch what's going on. Finally, keep in mind that digital currencies are quite volatile. Many other investors have poured money into the virtual token universe only to watch it evaporate for every sudden Bitcoin billionaire. Investing in this area entails taking a chance. You may offer yourself to the greatest chance of success by completing your study before investing. Why are there ups and downs in cryptocurrency prices? Number 1. Internal governance. Cryptocurrency networks seldom follow a set of rigid rules. Developers make changes to projects depending on the feedback they get from the community. Some tokens, known as governance tokens, allow their owners a vote in how a project's future is shaped, including how a token is mined and utilized. Stakeholder agreement is required before any modifications to a token's governance can be implemented. Ethereum, for example, is attempting to switch from a proof-of-work to a proof-of-stake system, thereby making most of the costly mining equipment in data centers and people's basements obsolete. Ether's value will surely be affected as a result of this. Investors as a whole want a stable government. Even if a cryptocurrency's operation has shortcomings, investors prefer the devil they know to the one they don't. As a result, if things are somewhat difficult to alter, stable governance may be beneficial in delivering more consistent prices. The long process of upgrading software to enhance protocols, on the other hand, may restrict the upward potential of Bitcoin prices. It is detrimental to present stakeholders if an upgrade that would unleash value for Bitcoin investors takes months to implement. Number 2. Cryptocurrencies exchange. Bitcoin and Ether, two popular cryptocurrencies, are traded on various platforms. The most popular tokens are listed on almost every cryptocurrency market. On the other hand, certain smaller tokens may only be accessible on few exchanges, restricting access to some investors. Some wallet providers will gather quotations from many exchanges for any set of cryptocurrencies, but they will charge a fee, raising the cost of investing. In addition, if a cryptocurrency is slightly traded on a tiny exchange, the spread taken by the exchange may be too wide for certain investors. More exchanges listing a cryptocurrency may increase the number of investors ready and able to acquire it, raising demand. And with everything else being equal, when demand grows, so does the price. Number 3. Competition of different cryptos. There are dozens of cryptocurrencies, and new projects and tokens are launched daily. New competitors have a low barrier to entry, but producing a sustainable cryptocurrency also necessitates the development of a network of cryptocurrency users. A good blockchain application may rapidly grow a network, particularly if it addresses a flaw in a rival service. If a new competitor develops traction, it depletes the value of the incumbent, causing the incumbent's price to fall, while the new rival's token's price rises. The largest factor remains. The more the crypto will get adopted, the more prices will go crazy. For example, fast forward to a few years, we can guess more stability in the prices of Bitcoin and crypto invest. Then, we will start seeing people using crypto as a mode of international payments, especially if it becomes more viable to send Bitcoin than fiat currency, because the conversion cost of fiat currency around the world is around 2%, and nobody would love to spare 2% in conversion costs when they can do the same thing with Bitcoin. Most people who stop themselves from investing in crypto reason that the market is volatile and their money is at huge risk. But thanks to this volatility, you can also make the most amount of money than any other investment available. If we look at major Bitcoin dips, it clearly has the opportunity to make 200% of what you will put in. And if you study the ROI of such trading to traditional businesses, you will only be having that level of ROI when you will have a Silicon Valley startup. Stocks on average just pay 12% yearly returns, and if we subtract 2% inflation, then we are exactly getting only 10% out of the stock market. Yes, crypto is volatile, but here comes the greatest opportunity to actually double down your money. Thanks for watching till now. If you liked the video, then you will also like more content from our channel. So make sure you are subscribed so you don't miss the videos you love. Don't forget to like this video and turn on the notification bell. This is Altcoin Capital, and we'll see you in the next video.